This narration is for educational purposes only. It is not buy or sell recommendations.
Good morning, fellow ES traders. This is the weekend deep dive. So we'll start with some of the tools I use. I use Investor RT, which is a pretty robust tool. But typically, this is where I start. This is a daily candlestick chart with a volume profile overlapped in a micro composite setup. So I'll combine however many days within that profile to get a micro composite VPOC, value area, high and low volume nodes for that particular profile. For a higher time frame composite for high and low volume nodes are shown here. And these dotted lines. So looking at the candlestick, the top of this wick is the high of the day. On this one, the lower wick, the low of the day. We have open, close. This is open, close. So the biggest thing is looking at volume profile and marking it on your chart, the high volume nodes and the micro composite and the lower volume nodes. Price tends to move quickly through these low volume nodes because it's less auctioned. So there's less trading going on in these price areas. Heavier trading going on, obviously, in the heavier or in the high volume nodes. So price does tend to be attracted to these high volume nodes. What it does once it gets there, we don't know. That's the random part of it, but those are the things to watch. And in the morning before RTH open, you need to have a trading plan. You know already going into that trading day what you're going to do if, it's always if, price goes to whatever location you're trying to observe. And if you're going long or short, it's just within your trading plan. If we watch this price action, say this is your point of interest, and then you wanted to go short or long if it broke above retest resumption. Typically, if you're trying to go short, you're wanting to hit resistance, reject, and that's the trigger, that rejection. This is all hypothetical, and this is not trade recommendation, but something to consider if you want a trading plan is to prepare to anticipate price being rejected here, seeing a trigger, and then taking your short. Stop above here. Because we know buyers, what's going on, and this is kind of auction market theory, order flow, is we have buyers in control being absorbed by less passive sellers. Not less, but once buyers bring price up here, they're absorbed by any passive shorts. So there's still more buyers, so they're willing to pay for a higher price. So price goes up, absorbing all these shorts. Well, once it gets here, there's less buyers, more shorts, more sellers, so sellers take over. And the same thing on the way down. These sellers are absorbing buyers passively, and then it goes up. So that's kind of how the market works with buyers and sellers. Buyers are absorbing these sellers are absorbing these buyers. It's kind of counterintuitive, but there's always two sides to the trade. If someone's wanting to buy, there has to be someone willing to sell, and that's auction market theory is that there's always two sides to the trade. So there's never like an imbalance. You can't have more buyers or sellers, but you're going to have on the passive side, which is like this high liquidity here, these are passive orders, limit orders. So they're not going to trade unless price hits this, and they're going to be absorbed. You see it in this delta. You have aggressive buyers going through the ladder, absorbing these sellers. And then you have an imbalance, which is a rejection or breakout, whatever. So I touched on these iceberg, which is the MOB bundle for Bookmap, where you have traders hiding their order so it doesn't show up on the limit order book. That way they have less chance of algorithms kind of playing against them. And this is big desk institutional trading. This isn't for us retail traders. Nothing to do with us, but for something for us to observe in confluence of other triggers for your entry. Just another tool in the belt to have. I mean, if you're looking here and all of a sudden there's a pile of icebergs, but say price doesn't move down, it just kind of goes sideways, and then we start to see buy stops come in, there's a good chance this is getting ready to rip up because all those sellers are underwater now. So that's a lot to do with auction market theory, but what I want to touch mostly on today is FOMO and having control of your emotions when you know when you're triggered to walk away from the trading desk. Shut it down for the day, regroup tomorrow. So for Wednesday, yeah, that's when we had the big sell-off of the FOMC meeting. And earlier in the day, I took a stop, and I was looking to do a short mean reversion. I think it was a VWAP to VPOC. Took a stop, kind of revenge traded back to green, left, came back that afternoon, and that's when we had this big dump. And took many more stops because I was FOMOing in. So there's a lot of resources out there. This was just posted in chat. Randy Howell, I haven't watched any of his videos yet, but that really is the secret sauce to trading, is your emotions. You really have to understand when you get triggered and when to walk away. When you start to have those feelings and emotions come up, it's good to be aware of them. That way you can walk away and not take multiple stops. So a lot of resources out there. You definitely need a community of like-minded traders that have more experience than you do. That way you can, for one, hold yourself accountable when you get emotional and start taking unnecessary stops, because you're not trading at that point, you're gambling. And Tom always talks about that in chat. You might as well go to a casino, because at least you get a ticket to the show and a free buffet and drinks. So those are the biggest things. Have a trading plan in the morning. Go through your process. You have anticipation of what to do if price reaches those areas that you've already vetted in your pre-market plan. And also, over time, you develop a skill of the developing time frame and how to trade that. I know for me, trading the IB or VWAP to VPOC, those two things are the ones I'm going to be focusing on. And as time goes on and you see more of what happens in the market and yourself, your emotional state, what works best for you, become a better trader. So, all right, see you guys tomorrow. Thank you.